Pokémon! It's
Luis.
There's an asset class that's crushed the stock market, outperformed gold, and left most crypto portfolios in the dust. Over the last 2 decades, it's returned more than 3,800%. The S&P managed 480. No, it's not some exotic derivative or rare earth metal. It's Pokémon cards. And this market has lost its marbles. Mass-produced new cards are now seeing faster price growth than actual vintage rarities. People are destroying professionally graded cards to resell the mystique of yet-to-be graded ones. But is this bubble confined to one nostalgia-fueled hobby, or is it the Clefairy in the coal mine? My name is Louis, and today we find out. Before we begin, nothing in this video is financial advice. I'm not telling you to buy Charizards or short gold. I'm just asking why Pika is suddenly an investment thesis. If you want to find out why, smash that like button and let's dig in. First, we need to understand what we're actually trading here. The value of Pokémon cards rests on 3 pillars: rarity, condition, and character popularity. Rarity comes down to print runs. The very first came with the 1999 base set, which had 3 versions, including the extremely rare first edition that carried a small stamp and sold out before Pokemania fully gripped the United States. Then came Shadowless, the second printing that lacked the drop shadow behind the Pokemon character art on the card. Both the first edition and Shadowless are considered part of the limited edition run. The trickle that came before Unlimited Edition flooded the market to meet astronomical demand. These were printed at least 6 times with shadows added back and brighter colors. The visual differences are subtle, but the price gaps are not. Condition is where the third-party graders enter into the picture. 2 US companies, Professional Sports Authenticator or PSA, and Backit Grading Services, BGS, grade cards on a 1 to 10 scale that's now recognized by collectors worldwide. They assess 4 criteria: centering, corners, edges, and surface. A PSA 10 gem mint grade can multiply a card's value by 10x, sometimes 100x. The difference between a PSA 8 and a 10 can be the difference between pocket change and a mortgage down payment. Then there's the small matter of which Pokemon is on the card. They're not created equal. Let's face it, a Pidgey is not going to pay off your student loan. Obviously, Charizard is king here, with the first edition base set version considered the holy grail. Pikachu and Mewtwo have their moments, but there's no flipping Charizard. But rarity and nostalgia alone don't explain how Pokemon cards became such a developed market. What changed was the market infrastructure, and here those grading companies PSA and BGS have a lot to answer for. They're largely responsible for the system that turns cards into tradable commodities. Here's how it works. You send your card to PSA. They grade it, seal it in a hard plastic case called a slab with the grade printed on a label. That slab is now a standardized product. A PSA 10 Bulbasaur in New York is identical to a PSA 10 Bulbasaur in Berlin. Same grade, same protective case, same liquid market value. This matters because before grading, every transaction required trust. You had to inspect the card yourself, judge its condition, and worry about fakes. Now you could buy a slabbed card based purely on the grade and photos. The grading company has done the authentication and quality control, and shared trust in that system forms the basis for a market. With that established, online marketplaces like eBay, TCG Player, and StockX provided global liquidity and price transparency. Suddenly, a child in London could sell to collectors in Tokyo at fair market value. The results speak for themselves. In 1999, PSA 10 Charizard sold for $420,000 at auction. The overall trading card market broke $21 billion in 2024 and is projected to reach $58 billion by 2034. Pokemon cards are financial instruments now. Did they update Investopedia yet? Anyway, that's how the market works, or at least half of it. The 1999 base set, the six-figure Charizards, everything discussed so far. That's the vintage market. Vintage cards are those printed by Wizards of the Coast from 1999 to 2003, before production moved elsewhere. Vintage cards are driven by genuine scarcity. These haven't been printed in over 20 years. Supply is fixed, and a significant portion has been destroyed by time, children, and addicts. This is the legitimate collectible market, and it's showing clear signs of maturation. Price growth for the 1999 base set slowed from 55% in 2023 to 2024 down to 27% in 2024 to 2025. That's a negative growth delta of around negative 28 percentage points. In other words, the explosive phase is over for the vintage Pokémon card market. Prices are still rising, but at a decelerated rate. This is what healthy, long-term collectible markets look like. Now, let's compare that with the modern market, and in particular, cards released since 2020 during Pokémon's Sword and Shield and Scarlet and Violet eras. We're talking flamboyantly illustrated chase cards, sealed booster boxes with 36 packs, and elite trainer boxes with 8 to 9 packs, plus accessories like sleeves and dice. Unlike the scarce vintage cards, modern sets are printed in the highest quantities the Pokémon Company has ever produced. The supply isn't fixed, and it's massive. In fact, many of these sets are either still being printed or were recently reprinted to meet demand. So naturally, these cards should be worth less than their vintage counterparts. That's just basic supply and demand, right? Well, think again. These abundant modern cards are exhibiting wildly accelerating price growth. Modern, ungraded cards saw their growth rate accelerate by an average of 177% over the last 2 years. The Gray Hat Pikachu, a popular 2022 chase card, saw its growth rate accelerate by 355%. And that's just individual cards. Sealed Elite Trainer boxes saw a growth rate accelerate by over 300% in the same period. People are literally bidding on unopened boxes printed last year, no clue what's inside, betting someone will pay more next year. If you're not convinced of a bubble yet, let's see also the lottery ticket effect. Raw, ungraded modern cards now often sell for more than the same card graded PSA 7 or 8. This seems backwards until you understand the psychology. Modern cards benefit from superior printing technology, with about 90% submitted to PSA grading 8 or higher. So a PSA 7 or 8 is actually below average, a confirmed disappointment. PSA 8 out of 10 means the dream is dead. Your price ceiling is known and low. But a raw card? That's pure potential. Maybe it's a PSA 10, maybe a 9. The price difference between a 9 and a 10 can be astronomical, so buyers pay premiums for the possibility of submitting a raw card to PSA and hitting the jackpot. The market has turned this into a profitable strategy called cracking the slab. Your card grades a PSA 8? Don't panic. Just break the emergency glass, or plastic, I should say, calmly remove the card, and sell it raw. Whatever you do, don't disclose that your card was previously graded. Just list it as ungraded. That's not financial advice, by the way. The next buyer pays more for that raw card than they would for the confirmed PSA 8, betting they'll have better luck with the grader. It's speculation layered on speculation. The seller knows it's mid. The buyer is paying for the dream that it might not be. When a market systematically values erased information over confirmed quality, when covering up a card's known condition makes it worth more, you're not watching rational asset valuation. You're watching speculative euphoria wearing a very thin disguise. So, how did we get here? How did a collectible card game turn into a speculative asset class where people pay premiums for hidden information? Well, starting in 2020, two forces converged: an unprecedented accumulation of idle capital and the psychological conditions to deploy it irrationally. The pandemic created a liquidity explosion. Government support cushioned incomes while lockdowns eliminated spending on travel, dining, and entertainment. And this led to U.S. households sitting on $2.3 trillion in excess savings by summer of 2021. That money sat in highly liquid forms, cash and bank deposits, ready to deploy. The only question then was where to put it. Interest rates were near zero, traditional markets were volatile, and a generation of millennials sat at home with money burning holes in their accounts, searching for alternatives. But the economics alone don't answer the question, why Pokémon cards? That part is psychology. Collecting provided something the pandemic stole: control. Researching, organizing, and curating a collection offered a tangible sense of accomplishment amid chaos and uncertainty. Nostalgia turned into a coping mechanism. People anchored themselves in childhood memories, and for millennials, Pokémon cards hit the sweet spot. More accessible than art, more tangible than crypto, and carrying an emotional weight that stocks never could. Trading cards are now on track to become US giant retail Target's next billion-dollar market segment this year. Walmart Marketplace saw trading card sales jump 200% between February 2024 and June 2025. And Pokémon wasn't alone. It was the most accessible entry point into a massive market-wide pivot to alternative assets that exploded during the pandemic. When public markets crashed at the start of the crisis, investors sought out collectibles with low correlation to traditional assets, and the effect was explosive. This environment fueled the historic crypto bull run of 2020 to 2021 and the NFT boom, which exploded from an 82 million market cap to 17 billion in a single year. Pokémon cards were simply the most tangible symptom of this wider speculative mania. But if the pandemic provided the fuel, Logan Paul lit the match. In July 2022, the YouTuber turned WWE wrestler bought a PSA 10 Pikachu Illustrator card for $5.3 million. Then he wore it as a necklace to WrestleMania in a globally televised declaration that a slip of cardboard could command 7 figures. That Pikachu Illustrator card is certainly a rare one. Only 39 copies exist, awarded to winners of a 1998 Japanese illustration contest. But the price tag is more spectacle than reasoned valuation. Paul broadcast the purchase to his 23 million YouTube subscribers, turned the card into a prop for professional wrestling, and set a Guinness World Record in the process. And what he really did was reset the ceiling. If a single card could sell for 5.3 million, then suddenly every other rare card in existence had a new anchor price. Sellers adjusted their expectations upward. A card that might have been listed at $50,000 was now relisted at $200,000 because, well, if Pikachu Illustrator is worth millions, surely a first edition Charizard deserves another zero. This was classic price anchoring, a psychological bias where the first number you hear about an asset disproportionately influences your perception of its value.
Who's that Pokémon? It's
Nick.
Logan Paul moved the entire market's reference point, and the effects were immediate. Auction houses saw bidding wars intensify. Grading companies were flooded with submissions as collectors rushed to get their cards authenticated and slabbed. The secondary market exploded with new buyers who'd never touched a Pokémon card but understood Logan Paul just made 5 million look cheap. Paul brought attention, liquidity, and a potent injection of FOMO. Hobbyists who'd collected for nostalgia found themselves priced out. Long-term collectors watched prices detach from any reasonable fundamentals. The market flooded with flippers. People who'd never played the game, possibly never even seen the show, just saw a momentum trade and wanted in. By February 2025, Paul was advertising the card for sale on social media. In June, he displayed it at Fanatics Fest in New York, where, in a shocking scene captured on Paul's YouTube channel, someone shook the glass enclosure, causing the upright Pikachu to fall flat on his face. It's not clear whether this traumatic episode affected the card's resale prospects, but at the time of making this video, it looks like the man who set the ceiling has yet to find any buyers to meet him there. If you're wondering whether this qualifies as an actual bubble or just enthusiastic collecting, economist Hyman Minsky answered that question decades ago. Financial bubbles, whether in tulips, tech stocks, or trading cards, follow a predictable 5-stage pattern, and the Pokémon cards market is on track to catch them all. The first stage is displacement. A new paradigm captures attention, and something changes the way people think about an asset class. For Pokémon, this was the twin shock of the pandemic and Logan Paul. The pandemic created unprecedented liquidity and psychological conditions. Paul's 5.3 million purchase created a new valuation paradigm. Together, they displaced the old reality where Pokémon cards were children's toys, replacing it with a new one where they are seven-figure investments. Stage 2 is the boom. Prices rise steadily as more participants enter, drawn by early success stories and media coverage. This was 2021 through 2024. Auction records were smashed regularly. Mainstream outlets ran stories about Charizards selling for six figures. The boom fed itself, as rising prices attracted media attention, which brought in new buyers, pushing prices even higher. The boom creates the third stage, euphoria. This is your blow-off top. Caution gets abandoned, prices explode, and fundamentals become irrelevant because everyone's making money. This is the modern market right now. Growth rates accelerating by 180% for ungraded cards. Sealed boxes seeing 300% acceleration. Flippers cracking their slabs to sell PSA 8s as raw because confirmed quality is worse than imagined potential. This is greater fool theory in action. You can profit from an overvalued asset as long as there's someone willing to pay even more. It doesn't matter what the card is actually worth. It matters what the next person thinks that they could sell it for. The modern sealed box hoarders understand this perfectly. But at this point, the smart money starts heading for the exits. And here we have stage 4, profit taking. Wig-off fans will call it distribution. Long-term holders who rode the wave up begin selling into the euphoria. Anecdotal evidence suggests vintage collectors are doing exactly this, cashing out positions they've held for years at prices they never imagined. And then there's Logan Paul, the Pico top personified, marketing his $5.3 million card, apparently with no takers. And when the buyers really run out, you've made it to stage 5, panic. Panic sets in, the bubble bursts, prices collapse, and late entrants get wiped out. This stage hasn't arrived yet, but it's the logical endpoint for any market exhibiting the characteristics of the previous 4 stages. And when it comes, the modern market, cards and sealed products that were never scarce to begin with, will be the hardest hit. But every bubble has a plausible narrative. Tulips were rare and beautiful. .com stocks were the future of commerce. Beanie Babies were limited editions. The narrative is never the problem. The problem is when the narrative becomes an excuse to ignore valuation entirely. And that's where we are now. When abundant sealed boxes appreciate faster than genuine rarities, when slab cracking becomes profitable, the collectors have left the building. All that remains is speculation chasing momentum. The modern Pokémon market has entered euphoria, and it's not alone. In case you hadn't noticed, tech stocks, gold are all smashing all-time highs, more or less in unison. Which means the question isn't whether Pokémon is warning us about other bubbles. The question is whether all these bubbles are being inflated by the same forces, and whether they pop together.
Who's that Pokémon? It's
Guy.
And there's a precedent worth examining. Beanie Babies. Small stuffed animals filled with plastic pellets that briefly convinced millions of Americans they were sitting on retirement funds. Parallels are uncomfortable. Both started as children's toys. Both featured manufactured scarcity, limited editions, retired designs, artificial supply constraints. Both shifted from playthings to investments as adults convinced themselves that these were appreciating assets. Both exploded when eBay created transparent, liquid markets where previously localized collectibles could be traded globally. At the peak in 1998, Beanie Babies were selling for thousands of dollars. A Princess Diana bear went for $500,000. People were taking out second mortgages, maxing credit cards, filling storage units. The secondary market was estimated at $3 billion annually. Financial advisors were recommending diversification into Beanie Babies. Divorce settlements included custody battles over stuffed animals. Then, in 1999, it ended. Not gradually, but suddenly. The manufacturer, Thai Inc., announced they were discontinuing the line. This should have made existing babies more valuable, right? Scarcity increased. Instead, though, it triggered mass panic selling. The market collapsed almost overnight. And look at the timeline here. Beanie Babies crashed in 1999. The .com bubble popped in March of 2000. 2 bubbles, back to back, and both symptoms of the same underlying conditions. The late 1990s had the same conditions driving today's markets. In short, too much money chasing too few realistic returns. In the 90s, it inflated everything from tech stocks to stamps, coins, baseball cards, and yes, stuffed animals. When speculation goes systemic, it doesn't stay confined to equities. It spreads to any asset that can be traded. When those conditions reversed, when the Fed tightened and sentiments shifted, the bubble popped. Not simultaneously, but in sequence. Collectibles first, then stocks. Fast forward to today. Pokémon cards are in a bubble. So is the S&P. So is gold. Everything's inflating at once, and it's looking more and more like 1999 by the day. The question isn't whether Pokémon is the canary in the coal mine. The question is whether anyone cares. Well, the music has to stop one day. And when it happens, the goal is to make it out alive. So why not check out our top bear market survival tips? They might just come in handy, so I'll leave this here for you right up there. That's all from me for now, though. As always, thank you for watching, and I'll see you next time. It's Lewis, over and out.